Hi guys, welcome to this webinar today. Um, we'll get started in just a second. I see a lot of people are coming in, so that's great. So just a second. All right, we are live. Hello, good morning, good evening, good day, good afternoon, wherever you may be. Hello, guys, and welcome. Welcome to this first day of the Epic Trader Challenge webinars. Now, my name's Emir. I'm one of the traders here at Tradeology, and I'll be your co-host for this webinar. I'm super excited about this webinar and to see so many of you here with us today. And it's really nice. Thank you so much for joining. Now, I'm very excited. How are you feeling? You excited about this? Also, feel free to type in the chat. If you don't know where it is on the Zoom meeting, it's below at the bottom of your screen. You'll see a chat icon. If you click on it, you'll open up your chat and you can talk to us. I see already hello from USA, from Cameroon, Africa. Hi, everyone. Hi. Hello from Canada, from E.W. Jones. Earl, hello, Earl. So many people are still coming in. So many of you already joined. That's great. In case you are watching this stream on our YouTube channel or on our Facebook, we are streaming live there as well. You can use the YouTube chat or the Facebook chat to ask any questions or send us any messages. So yeah, great to see all you guys here. So you can ask any questions throughout the webinar. We will be trying to answer as much as possible. For those of you who have just joined, welcome. We are about to start. But before we do, let me introduce the presenter for today. Mr. A, you might know him. If you don't, he's a full-time Forex trader and has taught over 1,000 students his trading techniques and how to become a professional and successful trader. So hopefully he'll be able to do that for you too, guys. Hello, Adrian. It's great to have you here with us. How are you doing?
All right, there we go. Can you hear me?
Yes, we can, loud and clear.
Oh, great stuff. Thanks for joining me. I just wanted to make sure that everybody's comfortable. It seems like we are. My name is Adrian, for those who have not joined me on any past presentations. I've just had a quick look and I see many of my students are on here also. So welcome, guys. And there's many more that are new that I haven't met before. And I'm so glad to see you here also. For the moment, I just want to mention also that because it's live streaming, as Emir has said, thanks for the introduction, Emir, we could pick up the occasional technical issues, hopefully not. I've tried to get as much practice as I could with all the different streaming and what have you that's going on. So as long as everyone can hear me, I'll be presenting then shortly. And it seems like we've got people from everywhere here. There's so many actually that it fills up the screens, quite a few screens here. So thank you guys. And of course, to those of you joining me today on YouTube and live on Facebook, welcome. And I think I'll take it away from here, Amir. And let me just get going. Sorry, you'll see me moving around a little bit here and there. It's just trying to navigate all the different toolboxes. And as Amir said, during the course of the presentation, you're welcome to put in your chats, in the chat, any comments, any questions you might have. I'll definitely try and answer as many as possible in the time that we have. And because of the nature of the presentation, I am not going to be reading them. So Amir, you'll be assisting me just to gather any questions and comments as we go forward. So thank you guys for joining. And we can get started now. I think we're past the hour and I'll start by sharing my screen, and let's see how it goes from there. So firstly, I've got this presentation open, and I just want to make that live. There is also a box you'll notice on the right-hand side if you're joining me with Zoom. That's got pictures that kind of randomly selects people, and if that's getting in your way, I know that you can select it and possibly move it out the way if it is bothering you. So today we're starting with the first of a series of lessons and some free gifts that I want to give away, and I've called it the 5-Day Forex Challenge. The reason for that is within the next few days, I want to try and get us up to speed as much as possible with Forex so that you are able to practically start trading with Forex if you're new to Forex. And for those of you, because we're all at different levels here, some people have just started Forex, some people have been trading it for a while. Everyone's going to be on a different level. I understand that. So I'm trying to make it as generic as possible so that everybody can get some form of education out of this. And I really hope that it does help you. Now, it is a series. So we're going to start off today with a topic, and tomorrow I'm going to expand on that. And each day we'll expand on things a little bit more. So I'd encourage you to also join me on each of the days. And I'll explain to you later on how to do that. And to begin with, I'll be going through just a basic background of some very interesting facts that for those of you who aren't sure whether Forex is for you or isn't for you, that this might just change your mind. And then I want to go into a free system that I've given away today called the Profit Wave system. And I'm gathering if you are here, you probably have accessed the page where you would have click to register for this webinar, and you'll find that you're able to download the system from there. I'm going to cover that in this webinar, and I'm going to take it further in our next webinar tomorrow, where I'll show you some extra techniques that one can use when trading the system. And then right at the end, I'm going to give you the link once again so that you know where to register for the next webinar, and hopefully it'll be interesting for you. So we can get started. Thank you. So we all know the current situation we're in the world, a lot of upheaval going on. And despite a downturn in the overall economy, we know that there's plenty of opportunity in the Forex market to make money, whether the market is up or down. Right? So that's an important thing that we should all be aware of. And today, as I mentioned, this is the first day in our series where I'm hoping that you can become an epic trader, and I'm sure that you will find it interesting. The main point that I want to bring across in today's meeting is that we have a chance here to turn a crisis into an opportunity, right? And just out of interest, crisis comes from the Greek word krisis, which means a turning point in a disease that will result either in recovery or death. So we're not looking for death, we're looking for recovery, and we're definitely looking at this as a turning point for many people for various reasons. We know the financial situation for many is not that great out there, right? Now, Forex presents a massive opportunity. And just to give you some ideas about where people are headed in their personal lives, I know we're all from different walks of life all over the world, but around 50 million baby boomers will retire in the next 10 years. Right? That's quite a lot of people, obviously. And within the next 10 years, they're looking to secure their retirement. And we know how much of a crisis the world is in at the moment as far as investments and so on are concerned. 96% of businesses, on average, would fail to continue for 10 years or more. And I think, again, in the current situation we find ourselves in, that percentage might well creep up, or at least the 10 years might be reduced a little bit. Excuse me. Now, traders are also of the notion generally that as many as 4 potential developments will be impacting the most on the markets this year. Now, there's been many developments just in the last few months, right? So that could even be higher. 55% of traders believe that the US trade evolution is going to influence markets. So as things evolve in the US, we know that that's going to influence markets generally. And traders generally, from all walks of life, about 24% are relying on what's going on in China to make investment decisions. 12% are relying on what's going to be happening with Brexit, which is also another incident that is ongoing. And 8% will rely on just the developing market. But I think just from this, you can see that there's a lot of movement going on as far as how long we've got, many of us to look forward to retirement and so on, and the evolution that the markets are going through at the moment. And I know a lot of people on here would also be business people who are worried about success in their business. In a sense, I'd like to treat what I'm going to present to you today as a business also. Not a traditional business, but you could see it as a business. You're going to be earning a revenue. It's going to give you an income, right? And being volatile, the Forex markets are affected by current events. And volatility for traders is great, especially for Forex traders. We want volatility. And as I mentioned earlier, whether the markets go up or down, doesn't really matter. It gives us the opportunity to invest in the markets. So how does Forex compare to traditional investing? Well, I've prepared this graph for you, the most recent statistics that I could find. And these are based, again, because we're all in different parts of the world, this might vary depending on where you are, but these are based on USA figures. Over the course of a year, if you were to invest your money in a savings account, you'll see on the left of the screen there, you could expect on average about a 1.1% return. If you had to invest it in treasury bonds, about a 1.7% return. And in the money markets, possibly around 2%, with treasury bills, about 3%, with the SAP 500, which is basically your stock market, about 8% return over the course of a year on your investment. Real estate, of course, this fluctuates and varies, but on average, you might expect a 10% return on your investment there. And then we've got a few others at 11%. And if you're a small business owner, in normal trading conditions, you could expect to have made up to perhaps around 44% on average return on your investment for your regular traditional type business. And you'll see right on the right-hand side there, we have Forex. And I've limited it there to 100% because really the sky's the limit in most senses. But at 100%, which is easily achievable and is achievable all the time by many different traders, you can see that that is by far gives you the greatest opportunity to make a return on your investment. It outperforms savings by almost 9,000%, the S&P by 1,150%, and real estate by over 800%. So there's huge potential here. As I said, there's huge opportunity. Now, what about Forex then distinguishes it from other investments? How come there is such an opportunity? Well, many of you might know this already, but let me just cover some groundwork here for those who don't. Various currency pairs can be traded, and you can also trade oil and gold. And you can trade them also with the systems that I'm going to be giving away on the same platform, which is normally the MetaTrader 4 platform, which I think most of you would have heard about, but that can be downloaded from your broker or from metatrader4.com as a free trading platform to practice on. You can start from as low as $50, and this is with the brokers. Think of them as your bank, where you're putting a deposit down and then you're trading off a platform that they would provide, which is normally what's called an MT4 or MetaTrader 4 platform. You can start with a live account for as little as $50 in some cases. Now, you can profit whether the market is up or down. As I said, volatility is our friend. You can trade anytime during the week, excluding weekends when the markets are closed, but basically during the week, the markets are open most of the time. Any time frame you want, from 1 minute to weekly, so you can set short durations of trades, which might take minutes to play out, or that could take weeks to play out, depending on your preference. Now, you can set your own price targets, and very often that is also set with the system. And my systems that I'm going to be showing you over the next few days have certain price targets included. which is great. You don't have to sit fiddling and trying to figure out what your targets are. You can set your own risk limit. And again, my systems will provide this for you. And you can trade from home. As most of you are aware, most of you are probably streaming from your home at the moment. What you basically need is a PC, a strong internet, and a system, and you're good to go. So we're very mobile, and we can trade any session or time of day. So even during the day, you can trade different times of day and so on. So there's lots of opportunities and a lot that distinguishes us from other forms of investments, or as I said, businesses. I'd like you to think of this as a business. Now, other than that, we've got something called leverage, which we'll go into over the course of a few days. But basically, and I'm just using $10,000 as an example, just to give you a base, it could be $100, it could be $1,000, and so on. With Forex, we've got the opportunity, depending also on where you are in the world and what the brokers allow you to do, based on where you are, you could leverage their values, their funds. And on the left there, you could see in the blue column there, if you had a leverage of 1 to 5, that means that you can leverage $5,000 on a transaction. And if you had to get 100 pip win on that, you would get a $41 gain. If you had to leverage 1 to 50, you would be able to make use of, in a sense, $50,000 of the brokers forwarding to you, in a sense, and you would be able to make $415 off the same trade. 1 is to 100, you could make $830, and if you were fortunate enough to have a broker that allows you to do a leverage of 1 to 500, then you could make as much as $4,000 off a single trade. So the Forex market then is also the biggest financial market in the world in terms of trading volume, liquidity, and value. It operates 24 hours a day, and the industry is valued at $1.9 quadrillion. It's mind-boggling. While turnover is 53 times bigger than the New York Stock Exchange. Gives you an idea of the volume of trades that happen every day in the Forex market. We compare to other financial markets, the Forex market is a staggering 12 times bigger than the future market, 27 times larger than the stock markets. Now, you don't have to know anything about the future markets, the stock markets. Perhaps you do have some experience with them, but this just gives you an idea of how big an opportunity this is. And the most recent statistics here for 2019, the Bank of International Settlements, or BIS, found that the global Forex market has a daily trading volume per day of $6.6 trillion. And that's even increased by 29% since 2016. And I can bet our bottom dollar that here in 2020, that's increased even more. So it's the volume of trading is growing within this market. And spot Forex is the most popular asset class with $2 trillion worth of transactions traded daily in exchange markets. After that, the instruments with the largest daily turnover are forwards, foreign exchange swaps, currency swaps, and options and others, which we don't go into here. But again, excuse me, just to give you an idea of how big this is. Now, market participants, who are they? Who's actually trading? We have financial institutions, hedge funds, investment managers, multinational corporations, commercial investment central banks, and retail Forex traders. And you and I, can be classified as retail Forex traders. We're not institutions, we're not corporations, we're not banks. We are simply people at home trading off our PCs, off our laptops, and we only make up 5.5% of the entire Forex market globally. So although there might be many thousands of people trading privately in their homes, we make up a very small percentage of the entire Forex market. And that presents an opportunity for us to get into the markets. There's lots of scope for people to join us. So let's just do a quick recap. 6.6 trillion daily volume traded, 29% increase in volume since 2006, 12 times larger than the future market, 27 times larger than the equities market. Lots of space for more traders to join. Excuse me. Now, the largest financial centers, just out of interest, number one largest, the biggest is London, then New York, and then we have Singapore. And majority of Forex trading is facilitated in 5 major financial hubs around the world. 79% of Forex trading is conducted in the United Kingdom, United States, Hong Kong, Singapore, and Japan. And you might find that you're from one of these countries today. I'm sure most of us on here today might be from the UK or from the United States, and that I'm pretty sure of. Now, the UK is by far the largest Forex trading center, contributes to 43% of the world's foreign exchange turnover, and the recent rising popularity of Forex trading in Asia, China, has increased from the 13th to the 8th largest Forex trading center in the world. So from the Asian side, we're looking at that gaining momentum. So just on the graph here again, you can see by far the United Kingdom has got the most trading, then the United States, Singapore, and then finally down here, Australia. And there's a few Australians on here, I'm sure, as well. But by volume, you can see where most of the trading is happening is from traders in the United Kingdom. Now, the 7 major currency pairs, let's quickly cover those. The global Forex market is comprised actually of 170 different, what we call major, minor, and exotic currencies. Now, although traders have a diverse range of currency pair options to choose from, the 7 major Forex pairs make up 85% of all global foreign exchange transactions. And let's have a look at these and compare them, right? So these are the most frequently traded currency pairs and their share of the trading market. And I'm also going to encourage you, when you are trading any of the systems that I've got, to make use of one of these pairs. And you'll see the United States or the US dollar, US euro pair, one of the majors, makes up 24% of all trades. And the United States dollar Japanese yen, USD JPY, makes up 13%. Sorry, must just get my glasses there. I don't want to give you the wrong figure. And the USD pound, 9%, Australian dollar, US dollar, 5%, US dollar, Canadian dollar, 4%, US dollar and the Chinese yuan, 4%, and then we have the US dollar Swiss franc at 3%. So most traders trade the USD euro pair, followed by the USD Japanese yen and the USD British pound, and then the United States dollar, US Australian dollar. And I'm going to encourage you also to trade one of these pairs when you are trading. You'll find the most volatility occurs then in these pairs because there are so many traders trading on them. Now, the world's most popular currencies then, the United States dollar, you would notice in all of those scenarios, plays a key role in the financial markets and international economics due to peg currencies, dollarization, as well as most central banks holding their reserves in the United States dollar. So on most pairs that you'll find, and which I'd encourage you also to try trade, you'll find the United States dollar is one of the currencies in the pairs. Now, the most popular currencies, 43% of foreign exchange transactions take place in the UK, but 88% of Forex transactions include the US dollar on one side of the transaction. So 88% of all trades, the US dollar will be on one side of the transaction. And that shows the dominance of the USD currency in international Forex trading. And where that can help us is we know that that's where the most volatility is going to be. We want to try and be trading one of the pairs with the US dollar in it, and it looks like also the euro and the pound, the Australian dollar, for example, are going to have the most volatility. So bear that in mind when you are trading. Now, the second most popular currency to be included in a foreign transaction is the euro. And a boost in the turnover of the euro during the past 3 years can be linked to an increased turnover of the euro CHF and euro Japanese yen currency pairs. So these pairs in particular have been quite volatile over the last couple of years, more so. And the third most likely currency to be included in foreign transactions is the Japanese yen. So we've got the US dollar, the euro, and the yen. And unlike the euro and Japanese yen turnover, of the pound, Australian dollar, Canadian dollar, and Swiss franc has remained pretty much unchanged over the last 3 years. So the most volatility is going to be in a pair with the US dollar, euro, and the yen. Now, as I mentioned, this is just a quick recap. 88% of forex trades involve the US dollar. Gives you an idea, just represented on a pie chart there, or representation. The euro is 32%, Japanese yen 16, pound 12, Australian dollar 6, Canadian dollar 5, and the Swiss franc 5. Gives you an idea of how dominant the United States dollar is in our forex transactions. Now, there is risk, of course, with forex, and as a retail investor, speculating on forex does involve a very high level of risk and of losing money due to leverage and volatile currency markets. And of course, anyone would be remiss in not saying this to you, that the risk can be very high, as many of you already know. But as I'm going to go through the next few parts of this presentation, it's not to scare you, but it's just to put in perspective what one can expect as a form of risk in this market. And of course, what I'm trying to establish over the next 5 days with my systems that I'm giving away, with the education, with these presentations, is to lower the risk. Because as you'll see, most people are not aware of the risk to begin with. And secondly, even if they are, they don't know what to do about it, or how to mitigate against the risk. So let's just have a look at a few bits of information here. When 35 foreign exchange brokers were recently assessed, one of them found that on average, 71% of retail forex traders lose money when trading forex. And the losses have increased in April, with May published figures on UK forex broker websites showing that more trader accounts have lost money. And I have my suspicions as to why, and you can see that red line showing just how many have, dependent on which brokers they are, have been losing money. And one of the reasons is, I think there's a lot of people jumping onto the so-called forex bandwagon, not knowing or having been promised that this is the holy grail. And certainly there's huge opportunity and huge potential, but treating it as if it's gambling or just, you're going to press buy or sell and you're going to make money, that's what's resulting in a lot of people failing. And that's not what I intend for you at all, being on this presentation. Now, although 29% of retail investors achieve capital gains, 99% actually of forex traders fail to make profits for more than 4 continuous quarters. And most of these are retail traders like you and I. And again, people that are simply coming in, using it as a form of gambling and then going out again, it's not going to work unless you've got a proper system. There's a skill involved here, and it can be taught. It can be taught in a short period of time, but you do have to bear this in mind, right? Now, also want to mention something that comes up frequently, and that's called expert advisors. And what makes forex traders successful oftentimes, and among 29% of investors who make profits, can be linked to trading strategies executed and knowledge about forex trading signals. Now, in each of the systems I give you, I'm also going to be showing you a system that has signals in it. So that is a start in mitigating our risk. And just for interest's sake, algorithmic trading strategies play an important role in successful forex trading. 90% of profitable trades utilize expert advisors or trading assistants, and definitely also different indicators. And you'll get indicators in each of my systems. So that will help us to become within the top range of traders that do make money. Now, forex trading demographics, let's quickly go over this, because you might find yourself amongst these, and I just want you to know that you're not alone if you are, but the majority of retail forex investors are men. So I'd expect that the majority of people on this call might be men also, not being sexist, but it just is a fact. 10% of traders are female. Now, although, excuse me, far fewer women trade Forex than men, a study carried out by a business school found that females often outperform men by 1.8% when investing in financial markets, as men are more likely to take risks and break trading rules, while women follow long-term strategies. So any women on here, you've got a better chance of outperforming the men. And it's crucial here that I need to pause and make that point that most traders then are taking risks unnecessarily and also breaking the trading rules. And in all of the systems I give away, I have particular rules to follow. They'll be set out. It won't just be buy and sell. It'll be follow the indicators that will help mitigate your risk and do them in a particular order and enter and exit at a particular time and stick to those rules. And you will increase, excuse me, your chances of success greatly by doing that. Now, also in regards to age, 43% or just over of traders are aged between 34 and 45 years of age. So I'd expect probably around that region are on this call at the moment. You might find yourself amongst them. 5% of Forex traders are millennials, aged between 25 and 34, and 15% of Forex traders are over the age of 45, such as myself. I fall into that category. But of course, one can start off with one age group and move over time. Now, 95% of traders still fail and 80% quit in the first 2 years. The major cause of failure is lack of sound research. And that is one of the causes of failure. But that is the very fact that you're here today tells me that you're already in the mindset that you want to learn a bit more. This is, in a sense, a form of research. And that's puts you on a good footing, more so than 95% of other traders out there. Okay, and the growth of artificial intelligence is more pronounced in the Forex sector recently as well, due to the increased use of robots for trading. Now, I don't particularly like robots. Robots are automated trading tools that, because they are not very flexible. So what I do instead is I provide systems generally that you can learn very quickly and that you can implement, and you make the final decision based on the indicators that are given there that also use AI, but they don't automatically take trades for you. And I don't believe that that is the best solution for my students. And for those of you who have been trading for a while, you'll know the trade life cycle, but let me just point it out to you. If you're not sure, you would first select a pair. As I mentioned, there's 7 major currency pairs that I prefer that when you're starting out that you use. You select your account risk. That is also dependent on your capital, how much money you invest with the brokers. I'm not a broker. I'm here just to educate you. You set the time frame. So do you want to trade over the course of a week, a few minutes, and so on? You set your entry point, and that would be dependent on the system. You select your exit point. Again, my system will explain that to you. Select your risk, depends on your lot size, your leverage, etc. Into the trade, the profit from the trade, you enter another trade. Now, of course, you might lose a trade here and there, but the other thing to bear in mind is that there's no trading system that's 100% effective. There will be losing trades occasionally. That's the nature of the game. If anyone tells you otherwise, they're lying to you. And so there is risk, as I mentioned, but we are trying to mitigate our risk, and we want to make use of our opportunities to get into the market. The one thing I know now that I wish I had known when I got started is that having a proven system would have saved me hours of study and thousands of dollars. And that's from Desmond Khayer. And I thought that was a very good quote from him, testimonial, because it's extremely true. When you have a solid system, a proven system, which all of my systems are, then you will save yourself hours and hours of studying and researching, Googling online and whatever to figure out how to trade. And thousands of dollars, because you won't be basically gambling. You'll be setting trades up based on a certain set of criteria to mitigate your risk. Now, the magic of a proven system, well, what is a proven system? It's a proven, replicable, mechanical system that you can use straight away to trade and profit with. And I'm going to go through one of them in just a moment that you will have had access to, or if you haven't, I'm going to explain how to get it. And that is a proven replicable mechanical system. In other words, you could take it, you could use it, anyone can use it. And why use it? You'd save yourself time, money, and you'd profit from it. When to use it? Start it immediately. How much does it cost? I'm going to give it to you free. It's free today, no cost, my gift to you for being here. It's called a profit wave. And where can you get this? You can get this if you haven't yet been to our site, www.acceleratingprofits.com. And Emir, if you wouldn't mind just typing it into the chat there, please, for people to
Of
get.
course.
You write it down if they'd like. I'll remind you again closer to the end of this presentation. And I just want to go forward with it. Then all you need to do once you get to the site is you just need to download the file. You'll see there's a manual, a little image with a manual next to it where you can download it. You press a few buttons and you get started with it. It's called a profit wave trading system. So before I get onto that, I just want to do some house checking and just type into the chat if you can, please, just so we can get an idea. How many of you have already downloaded the system? Or maybe even have had a couple of hours to start using it prior to this presentation. And I can just see, I could try and get to have a look at the chats. Emir will be looking at it for me as well. So sorry if I'm
Yeah.
just pausing to look down.
Yeah,
All
we
right,
have.
a lot of people have downloaded it already. Excellent.
Yes.
Okay, so at least it tells me that you know where to go.
Yeah, we got Ivy, we got Michael, Farhana,
Yes.
T, William, Marion, Joe, Jitendra. Sorry if I pronounced it wrong. I
Excellent.
apologize.
Oh, no,
Benji,
that's great. I just wanted to get an idea because
Alistair. Yeah.
if everyone was saying that they weren't going to be able to get hold of it, then I know that there must be some kind of issue, but I'm glad that you've got it. And I know that you probably wouldn't have had time to go through it yet. So I'm going to save you a bit of time and just give you a basic understanding of how the system works. And as I mentioned today, what I want to do, because I know you haven't had a chance yet to even put it on your charts or really have a look at it, I would like you to spend what's left of today and tomorrow using the system and just getting familiar with it to an extent. You'll see it's very quick to get familiar with. And basically what you're going to be waiting for is just for the market conditions to be right to trade it. I'm also going to ask before I carry on that if you do test it out, that you do try it out firstly on what's called a demonstration account with your broker, a paper trading account, demo account. There's different terminologies there, but let's just call it demo account. Try it out on that first until you are satisfied that you're familiar with the rules. And then you could potentially start trading it on a live or real money account. And even then, I'd suggest starts with as low an amount as possible, maybe a $50 account if you can, and very low risk to reward or very low risk per trade, 1%, 2% at maximum per trade, until you get familiar with it, right? So that disclaimer, so to speak. First, have a try at it, give it a go on a demo account before you move to a live account. And then also, remember that part of what I'm teaching you today is just the overview of the system to give you the chance to do that. And then tomorrow, I'm going to also go through a couple of other techniques that I'm not going to mention today because there's just not enough time, but I'm going to go even more into depth into this particular system. So please bear with me tomorrow. And what I'd like you to do then is just to, when you get a chance to go down and download it, I'll remind you again at the end of the presentation what the link is to do that with. Now, the system is based on a concept of identifying reversal points in the market and entering on new emerging trends. It relies on a combination of standard and custom indicators, and I'll be showing you some images just now and the rules and so on that are applied to our charts in a unique manner and used to generate trade signals. Profit wave trading system can be traded on all time frames and all available currency pairs. I've suggested a few currency pairs to you already. The majors I think would be good to start with. I would even suggest try it out on the 15-minute time frame on a demo account while you're learning the system. It requires very little input. It's easy to learn. Would be a good fit for both beginner and experienced traders. It's a full-on system. So whether you're a beginner or an experienced trader, you can benefit from this. Okay. Now the chart template that you'll find on the page, with it is included what's called an auto installation wizard. So you'll find a little what's called an exe file there. Just double click on it and it'll prompt you to install the template on your chart. So you don't even have to go fidget on your platforms. Just press that and it'll guide you through a step-by-step process on how to install it on your MetaTrader 4 platform. And most traders actually trade on MetaTrader, I think it's about 85%. So we've made it for that. Now, at first glance, let's have a quick look at this. And just before I continue, my sound still okay, Mia? Everything's still good?
Yes, all good.
All good. All right. So this is what the profit wave trailing system will look like once it's been applied onto your chart. As you can see, the chart remains relatively uncluttered. Try to make it as easily presentable for you, as simple as possible on the chart so that you don't get distracted with too many things, especially for those who are new to trading. So the components of the system, again, I'll go through the images in just a moment. We just go through this. All indicators are color-coded, so that would make it easier for you also. That will show either a buy or sell state. With moving averages, a blue color depicts buy. So when we see blue, indicates that the potential for a buy trade or going long. And when it's a red color, it would depict the sell state or potential to sell or to go short. We also have a MACD histogram, which will change color depending on whether it's above or below the zero level. And let me get to those images in just a moment. So the moving averages, for those of you who are familiar with trading, we've got two moving averages, the blue 18 SMA and the red 16 SMA. The blue SMA is applied to the low, the red SMA is applied to the blue SMA's dot. All of this might sound like Greek to you. If it does, don't worry about that. I just want to disclose some of the settings to those who are more experienced to let them know. But all you need to know is basically these two lines of blue and a red on one chart. Now, when the blue is above the red, we'll be on the lookout for buy trades. When the blue is below the red, we'll be on the lookout for sell trades. So here's what the lines would look like on your chart. Two lines, a blue and a red. Now, when you see that blue line, as you'll see from the left of the screen here, I'm not sure if you can see my mouse, but basically it moves along and then it crosses over the red line. That indicates that there's a potential buy setup that you might be able to buy into the market. And of course, this is also predicated upon the other rules, which I'll cover just now, coming into effect also. So the first rule would be that this needs to cross over for a buy trade, or it needs to cross under the red line. The blue line is under it. At that point, we get a signal that we could be on the lookout for a sell trade. Oh, there we go, the blue SMA and the red SMA. And then we've got some other indicator specifically for you called the step MA. Now, the step MA is a custom indicator based on the stepped moving averages and stochastic oscillator. Okay, for those of you who are interested in that, that's what it's based on. Otherwise, if it's Greek to you, once again, just be aware that there is an indicator called the step MA on your chart. It provides an opportunity to detect various peculiarities and patterns in price dynamics, which are invisible to the naked eye. Okay, so you wouldn't be able to see these dynamics just by looking at the chart. You would have to really have a look at your indicator to determine what is happening. So let's have a look at this thing. When the blue line for this indicator is above the red line, then we're looking out for buy opportunities. And when the blue line crosses above the red line, again, signaled by a blue upwards arrow, we're looking for a buy opportunity. So let me just repeat that again. When a blue line crosses above the red line, then you'll see that there's little arrows. You can see the arrows there on the screen. That would indicate if there's an arrow pointing up, it basically means that you could potentially buy. And when there's a little green arrow, red arrow, sorry, pointing down, that tells you that there's an opportunity to sell. Now we're going to combine that with the first rule that I just showed you about for the MAs, when the blue is above the red, for example, and then you drop down, you see also, oh, here's a little blue arrow here. That's the second part, so it's very quick to see on your charts. And the opposite is true. When the blue line is below the red line, we'll be looking for sell opportunities. And as I mentioned before, then we get a little red arrow pointing downwards. So very simple to see, easy to see on your charts, and you'll notice that once you've got it on your charts. Now the MACD, the moving average convergence divergence, is another indicator that we have on here. It's what's called a trend following momentum indicator. It shows the relationship between two moving averages, and it's calculated by subtracting the 26-period exponential moving average EMA from the 12-period EMA. Again, you don't need to know this if you're new to trading, just to know that there is another indicator called the MACD on the charts, and this is what it would look like. It consists of a blue MACD line, which you can see there to the left of the screen, a red signal line, and a histogram. So the histogram, I'll just leave that on the screen for a moment so that you can see. Again, there's a blue line, a red line, and a histogram, which is all these lines moving either up or down. And what we have here, what we call the zero level, is in the middle here. It's called basically a median level, middle line, where the histogram will fluctuate either above or below that. So this histogram here will either be above or below that line. Whoops. And when the blue MACD line is above the red signal line, we'll be on the lookout for buy trades. When the blue MACD line is below the red signal line, we'll be looking out for sell trades. So pretty much standard. So again, we're looking for blue above or below, and we're looking out for sell trades. And the histogram tells us also it's either blue or orange, or going long or short. Right? So let's have a look at some of the rules for going long. In other words, for buying into the market. Number one, the blue SMA must be above the red SMA on the chart. So we can see that on this here. So at that point, the blue was above the red. Next, the step MA blue line must be above the step MA red line. And we can see that also clearly on the chart, and it occurred after the blue arrow appeared. Next, the MACD blue line must be above the red signal line. And you can see that clearly. So it's blue above, blue above, blue above on each of these. Now, the MACD histogram must also then be blue and above the zero level, which it will be if it's above the zero level. So looking for a blue line on the top, a blue line on the second indicator, a blue line above the red on the third indicator, and the MACD histogram being blue. We'd enter the trade at the close of the candle where all these conditions were met. So at the point that all these conditions were met, and you'll see, if you can see my mouse here, on the on this particular indicator here, the blue arrow occurred here, and the blue line was above the red line here, also on the MACD, and the histogram was blue, but this had not yet crossed. But at the time that this crossed, that means that all of these conditions were then met, and then we enter the trade at the close of the candle where all the conditions are met. So at that candle, once it closes, or at the open of the next candle, but at the close of the candle, that's where we would be entering into our trade. We're going to set a stop loss a few pips below the most recent swing low. So in this instance here, you can see basically wherever the market moves up and it swings in the other direction, it would be a swing high, swing low. At this point here, you have a low, and we'd set our stop loss just a few pips below that, just a little distance underneath. We'd set our take profit target at 1-to-1, meaning equidistant from the stop loss to the entry level. So if I had to measure from this yellow line here to this red line and set my target, it would be equidistant, the same distance away, for 1-to-1 risk to reward ratio. And actually going back to that chart then, just to follow through on that, you can see that price moved along, excuse me, then dropped a little bit, but our stop loss, which would mitigate our losses and our risk here, was set there. That was not touched. If it was touched, we'd be closed out in a loss. But as it is, the market moved up and hit our target here, almost perfectly to the spot. Now, sell or short trade rules, these are exactly the opposite of the long trade rules. But let's cover them. The blue SMA must be below the red SMA this time, as you'll see on the image. The step MA blue line must be below the step MA red line, which you'll see on the image. And you'll also notice that the arrow had red prior to that. And the MACD blue line must be below the red signal line. And as you can see, that is the case here on the bottom of the image. Next, the MACD histogram must be orange and below the 0 level. And again, you can see at this point here, it's below the 0 level, excuse me, and orange. And you can see that quite clearly. And that would be our 4 rules. Now, we'd enter the trade at the close of the candle where all these conditions were met. Again, if I look down here, if you can see my mouse, the red arrow appeared here. That condition was met at that point. The blue line below the red. Here, the blue line was already below the red, and the histogram was already orange. But we hadn't had a cross downwards yet. This line here. And once that happened, all of these were in alignment, and we knew that at the end of that candle, we could enter a trade at the close of that candle once those conditions were met, or at the open of the next candle. So at the close of that candle, we could have entered into the trade. We'd set our stop loss a few pips above the most recent swing high, which was in this instance depicted here, and we'd set our take profit at a 1-to-1 risk reward ratio, so equidistant from the stop loss to the entry point. We'd find our target from the entry. And as you can see here, this was actually a very nice trade. We'll have just moved straight down to that. Now, yes, occasionally you'll notice that the market does carry on after that, and you might think to yourself, wow, could have gotten in for more. But remember, we're not trying to be superheroes here. We're trying to make sure that we, number one, mitigate our risk. We want to make sure that if we do lose, we lose as little as possible, and that we give ourselves the best chances possible of winning a trade. And all my students that are on here today will know that I say this over and over, that when we're trading, we're looking at this in the long term, right? So we're looking at this as a marathon, not a sprint. Now, you might be able to get 1 or 2 huge trades, great. But over time, if you're going to be a consistently profitable trader, if you're going to treat this like a business, and if you want to be sure that at the end of each month or each week or however long you need to pay your bills, or for whatever reason you might be saving up for retirement or for your kids' education or just for a holiday or whatever the case, if you want to be consistent with that, you've got to try as best possible to stick to these rules. And there will be times that you will say, well, I've been stopped out. Rats, I lost a bit of money. Yes, that might happen. And there will be other times on the other end of the scale where you say, if I had stayed in, I could have potentially made a lot more money. And there are strategies for you to stay in, and I'm going to cover those tomorrow. But what I want to do today is just to cover the basic rules of this. As I said, tomorrow, in our next strategy session, I will take the same system, the same rules, and I'm going to give you a few extra strategies that you can adapt with this as far as your stop loss and your targets and so on are concerned. For today, I just want to make you aware what the basic rules are, and so that you can get familiar with this. Let's just have a look at some quick examples, and I just want to also do a check that everyone can still hear me. Does everyone follow along? Maybe if everyone could just say, yes, you're still following along. I'm hoping I'm not boring you. I'm trying to do it as quickly but as interestingly as I can, with as much information in the time that we have. So I'm just having a quick look here. Sorry if I squint or I move down, because I've got my glasses on and I've got to look at the screen. All right, everybody seems happy enough. Thank you guys for that. And if you're on Facebook, sorry, I'm not looking at you just now. I can only do one thing at a time. But if you're any comments from Facebook side or YouTube or social media? Anyone having issues there that you can see?
Yes, no, the replies are yes, looks great, thank you. Yes, yes, fascinating, Adrian from Howard Mall. Thank you,
Oh,
Tuan.
no,
Yes, and
no,
so on.
yes.
So, there are a couple of questions that came in. We are receiving
Okay.
them from both social media and this Zoom call. So,
All right.
would you like
Let's
to
do
end
this.
the?
Let
Mhm.
me go through these examples quickly. It might answer some of the questions, and otherwise, I'll take the questions. Let's finish with this particular
Great.
presentation for those who are following along, so I don't lose momentum and our train of thought, and then we can go back to the questions. Not a problem. All right. So let's have a look at a quick buy or long trade example on the Euro USD 4-hour trade. So this would have been an actual trade. Here, the blue SMA would have been above the red SMA at that particular point where the arrow is. And then the step MA line had moved above the step MA red line. The blue line had moved above the red line at that point. And here, the MACD blue line was above the signal line. So you could see the blue above the red again. And we can see that the histogram at that point there was also blue. Now, it might have been very small blue, hardly discernible, but it was a signal. If it's blue, it's a signal. And one would then have entered the trade at the close of the candle where all these conditions were met. At that point indicated on the chart. And the stop loss was set a few pips below the most recent swing low there. And the take profit was at a 1-to-1 risk reward ratio. Right, so that trade played out nicely within just a short time. The target was reached. And let's quickly go on to the short trade rules. Sorry, and these again are the exact opposite. So here the blue SMA below the red SMA, the blue line below the step MA red line, the MACD blue line must be below the red signal line at the bottom here, and the histogram orange below the zero level. All right, so the exact opposite of the buy trade rules. And we'd enter a trade at the close of the candle where all the conditions were met, as would be indicated at that point there. Now again, let's have a look here, bottom down below. We had the crossing over here. So that was one of the conditions we met. We had a red arrow had appeared and the blue step MA was below the red, and the MACD, the blue line here was below the red, and this was orange. So quite simple, across, red arrow, blue below red, and orange here. And then at that candle where all of those lined up, the close of that candle, into the trade, set the stop loss this time a few pips above the most recent swing high, just a short distance above the most recent swing high over there. And we could then set the take profit at a 1-to-1 risk reward ratio equidistant from our stop to our target as from the entry point. And well, that trade basically played out also within, let's say, about 12 candles later, we hit the target there. Now, before I get to this action step, I want to just ask at this point that we maybe open up to some questions. I know we're about an hour in already, and I might not be able to answer all the questions because they come from different platforms. But again, tomorrow, for those that I don't get answered today, I'm going to also carry over some of those questions, and we'll continue tomorrow. And perhaps in tomorrow's session, we'll also get to learn a few more things that might answer some of your questions. So please don't be offended if I don't get to them all. There's a lot of people on here asking questions, and we're going to try and get to whichever ones I can right now. So let's take them away. Amir, do you have any that you could potentially tell me about? So if I could
Yes,
just...
here one is about the indicators from Neville. Do
Mhm.
the indicators repaint?
All right. So basically, a lot of indicators do repaint, but these ones will give you a signal in real time. So if you find that you are in a trade, and at the time that all the signals are in alignment, at that time, if they are all showing this, then that's a signal to go. You can go long or short, depending on whether it's a long or short trade. So you can rely on the signals. Right.
Great.
Any
We
other
have
question?
one. It's more of a comment than a question, but
Mm.
it's from Andre. The profit wave worked. I'm already in profit on Nasdaq 30 minutes time frame. So
Excellent. Well done, Andre. Well done. And actually, Andre, I'm going to ask you to do something for me in just a moment, but I'll get to that after the questions.
yeah, I've also answered. We've also answered a couple of questions directly in the chat. So I'll bring up a couple of more that haven't been answered. So Dave asked, what would be a reasonable amount to start trading on a live account for the first time?
All right. So I alluded to this in the beginning of the session. Was it David? David, um, when trading live for the first time, I would suggest that you go for the smallest account possible. Um, Mainly because I want you to get used to the psychology of trading on a live account, which is different to the psychology of trading on a demo account. I think a lot of my students would also bear with me with that, because once you've got real skin in the game, whether it's $1 or $1,000, you have suddenly got a different interest. Psychologically, you are more invested in the outcome of that trade, obviously, than if you were just practicing on an account where there was no money really involved. And so to begin with, especially as a beginner trader, I would advise you first to try it out on a demo account just to get used to the rules. Once you're satisfied, then take the smallest account size possible to begin with. You can always increase it, but if there's a minimal account size with your broker, it depends, but let's say $50 to $100. Don't be so much concerned about profit in terms of dollars when you start, rather in terms of percentage. So in other words, if you can increase your account by 1 or 2% per trade to begin with, and if you've got a $50 account and you make $1 or $2 on the trade, great. That is what you should be looking at. And then once you're familiar with that and you kind of more at ease with yourself, and over the next few days, in each of my presentations, I will hopefully be giving you a lot more information that could be of use for you when trading generally. And there's a whole field in itself of the psychology and the discipline of trading. But I would say take the smallest account size possible that you can. Trade with just 1 or 2% of your account per trade to begin with until you feel more confident, then increase your capital amount in the account. And as I mentioned, start off with a demo account first and be very disciplined with following the rules. If at any stage, also another adage I always give to my students is, if at any stage you're in doubt, especially if it's a live account, then rather stay out. Right? So when in doubt, stay out. Don't worry about the fact that afterwards you could have made whatever. I should have done it. But if you were in doubt at the time that you went into the trade, then rather skip the trade. If you've just had a fight with your spouse, if there's all kinds of things that could have happened and you're kind of unsure, your mind is not in the game at the time, rather just step away. Rather don't lose anything than basically go in with a mindset that you're going to lose, or that you're not sure, or you're disgruntled, or some issue. As I said, treat this as your business, right? So you want to treat this as a business, which it is. If you treat it properly as a business, it can become a business for you. And if it's just treated as basically a hobby and so on, then you're going to get lax in your discipline. So whether or not it is an actual hobby, but treat it like a business either way. And sorry, I just want to make sure my mic is on. Treat it like that, and you will have more success than if you just treated it like a hobby. So be serious about it. I'm trying to say. But yes, that's a good way of starting. And that is in itself, that question tells me that you are serious about it, because that's a good question to begin with. All right, so any more questions? Amir, hopefully I've answered that
Let's
for you.
have one more and then we can continue. This one comes from Howard. He asks, what is an acceptable win-loss ratio for a system in general? I think he meant.
Yeah, well, interestingly enough, Howard, I think it's in tomorrow's presentation or the day after, I've got a whole section that I'll be covering this with you. And it goes into research that I've done with many students of mine, and I'll be going into that. But basically, you want a system, essentially, that is, and I'll show you all the mathematical figurations for those of you who are interested in that. I'll give you graphs and whatever that's coming up. Not today, but I think it's tomorrow or the day after. But essentially, you want your system to be a winning system at least 60 to 70% of the time. So in other words, out of 100 trades, you would like it to have at least a 60% win rate, which is 60 out of 100 trades being winners. But there's a whole lot of variations that can occur there, and I will go into that in a lot more depth. And all of the systems, just out of curiosity, just so that you know, I never release, and I go through, and honestly, I've been through, I don't even know how many, possibly thousands over the decades, because I analyze other traders' systems also that are sent into me, and I've been director of a world trading competition, and I've seen so many systems, hundreds and hundreds of them, and they're all different, and some might be good for a short term. As I mentioned earlier, you might get 1 or 2 or 3 quick trades, great. But over the long term, consistently, one needs, and I'll go into what it is that we need that for. So it's actually something to look forward to, because I'll be spending a bit of time on that. What it is that you want a system to do for you. And you could make money even on a system that wins 50% of the time, but your probabilities of success are much less. But all of the systems that I give, including this one, I never release one that I don't think it gives you a fighting chance in the market, at the very least, but that has got a very high win rate. And the win rates can depend also on which currency pairs you're trading, what sessions you're trading, what your leverage is, and so on. You'll still win, but your profitability might be different as well. So there's a lot of different variables, but you want it to be at least, I would say, at least a 60% win rate if you are trading any other systems that you found somewhere, or you want it to be as close as possible to 100%. But there's no system, as I mentioned before, that's got a 100% win rate. Anyone that tells you that is lying to you. But there are systems that have got a much higher win rate. And these types, this system here, for example, which should give you on average around 70% win rate over time, provided you follow the rules. And of course, initially, most traders, when they first start out, inevitably make mistakes and might have a few losses, which is why it's important to try it on a demo account first while you're learning the rules. And once you're familiar with it, then you can really start assessing the system for yourself. Hopefully that answers your question, Howard. I think you're one of my students also in some of the other courses. It's the right person I'm thinking of, so I'm glad to see you on here. Thanks, Howard. Right. Any other, Emil?
Well, just one more, then we can go on, and it's more a technical one. We have questions whether this is a recorded webinar, and will the recording be posted, and will they receive links via emails, or how to go about it? So if you could just say a few words about that.
Let's address that.
We're all on the
All right,
same
so
page.
firstly, then I'll just address those who have been asking questions that maybe I haven't got a chance then to answer. And that is that, as I mentioned, I will be doing another session tomorrow. Hopefully that might answer some of your questions. I'll also go through, I've got access to the questions both on social media and here. And if any haven't, or I feel haven't been answered properly or haven't been answered at all, I will carry them over to tomorrow also, so as to not keep everyone on here indefinitely. But yes, I am also recording these sessions. Of course, on a recorded session, you won't get the opportunity to ask questions if you're only looking at those, which is why I'm encouraging people to go onto these live. So in real time, there's a certain dynamic about it, and there's a certain interaction. We're all here together. We're a family. So I'd like us all to try and be as disciplined as we can in also our learning, which means that we should also, wherever possible, try and be on live. I'd appreciate that, and I'm sure you'll find value in that. So they will be recorded. They will be put up within, well, a few hours, but definitely by the next day of the session. So this particular session will be up on a page, and I'll show you the page again just now. The recording has to take various things into consideration, like the sound and a few other things that maybe need editing because of background noise. But other than that, it's going to be 100% what we discussed here today will be put up on a page where you will be able to access this system also. But maybe I should just mention that while we're still on day one, each day that we progress through, I'm going to be building on this system and another system that I'll be giving away in a few days' time. And even more after that, free trading tools and so on. So I'd advise, if you can, or I'd suggest that you try and attend every one in sequence. If you can't, for whatever reason, I realize it's late in the day, early in the morning, or whatever the case, or you're at work or just can't do it, then please do schedule to watch the recordings at least the following day afterwards. I'll make them available for you for at least during the course of this session for those who joined, and for those who have just missed it for whatever reason. So let me get to that point then next. I think that I've answered those questions now. I'll just tell you where to do it. What I would like you to do simultaneously, and there was a sorry, I forget the name now, but I asked you just to hang back a little bit with your trade. Earlier on, somebody was posting the trade results, and even others might be doing the same. What I would like you to do today is, you can call it homework, you can call it just learning after hours, is to, of course, download and trade with the system within the next 24 hours. On a demo account, it doesn't have to be a real money account, but just get started. I think 90% of the battle is it's great to listen and it's great for me to do the presentation, but really what we need you to do is to download it and try and trade it within the next 24 hours. Why 24 hours? Because, well, that will give you the opportunity to ask me more questions tomorrow, having had a chance to trade with it or learn it. Now, once you do have it on your charts and you're trading it, what I'd like you to do is, if you make a trade, any trade, just to post for me, please, what you like about the system or even the trade result at www.acceleratingprofits.com. And perhaps if you could just put that back into the chat again as well, Amir.
Sure.
So in the chat, there will be a link. You would have gotten here to begin with, I think, anyway. You would have accessed this webinar from there. But and you'll be able to download the system again from this link over here. But if you do go to that page again, even if you've downloaded it, scroll down to the bottom of the page and you'll see there's an opportunity for you there to post a comment. And those comments, I'm going to go through every single one of them. So between now and tomorrow my time, we're all in different time zones. And for those of you who are wondering why I've got such a strange accent and why I'm hopefully speaking clearly, I'm a South African, born in South Africa, so I've got a South African accent. I'm not Australian, no offense to the Australians, but so I'm in a different time zone to some of you guys, but I will be looking at every single one of these. And what I'm going to do is, after I cover in each day, I'm going to be making notes of the comments every day. As we go through this, you'll be able to post comments. And we're going to be choosing, I'll be selecting a few of the comments, and I'm going to be giving away another full-on trading system never before released, worth at least $750 to many of you. So that at the end of the series, despite the knowledge that you gain and all the free systems and everything else that you get, I want to give you the opportunity to also win a fantastic prize just for commenting and engaging with me on the page. So again, that's www.acceleratingprofits.com. You've taken a very good first step in being here today. Hopefully, a lot of what I've said has made sense to you. Next step is to actually implement some of it and to post a comment if you would like to stand a chance of winning a free system worth at least $750. In fact, more than that. But I'll explain that later right at the end of our series. If a person has stayed with me throughout the series, I will then be awarding it to a few people, and I'm very excited about that. But even if you're not in it to win anything, I still would like you to please participate. I'm going to be teaching you so much more. I can't even explain because it's going to take me a long time to do that. But that's why I've got these other sessions scheduled. So if you feel that you need more information, tomorrow will be the day to please join me. And if you feel that you haven't gotten enough, that you're still unsure, don't worry. I've got you. We're going to continue with this each day. So I think I'll stop it there. Stop sharing my screen at least, because I just want to see all your faces and wave to you there. I haven't had a chance to do that while I'm on the presentation. I can't really see. Hi, everyone's all over the place. A few of you are on camera, some of you are not. Those of you are not, no offense, I understand. We can't all be on camera, but if you are, I'm grateful for you being there. So let's just see who all's on here. I'm going to have to lean right in. Sorry, you're going to see my bald head. Klaus, John, oh, thank you. Amir, there you are. Howard, finally get to see you, my friend. Putor, I don't know if I'm pronouncing that right. Ernst, John, hello, buddy. Elijah, good to have you here. And Richard, also joining us. Good to see you there. I'm sorry that we can't have everyone unmuted, or it would just be chaos, as I'm sure you'd understand, everyone talking at the same time. So thanks for that. And Emir, any other last thoughts before we go on, before I end? Any particular?
Well, just a big thank you. It was a great webinar. I really enjoyed it. I'm guessing from the comments that our attendees joined as well. Just before we leave, I'd like to schedule the next day, the next webinar, same time, same place. So 2 p.m. Eastern Standard Time at acceleratingprofits.com. So tomorrow, I hope I'll see you all guys for the second day, where we'll see some more stuff coming your way.
All right, great. That's a good point. I'm sorry, guys, I forgot to mention that. So where you downloaded this from now, where you're going to acceleratingprofits.com, within a few hours, we'll also have another link. If you miss it today, that's fine. Tomorrow, if you go back to the exact same page, there'll be another link underneath that I'll have updated to, say, the 8th of July. And you can just press on that and we will join each other tomorrow again. I'll be live streaming it again on Facebook and on YouTube. And I'm hoping you join me on either Zoom, Facebook, YouTube, wherever else you can possibly get all of that link. Thank you very much, guys. It's been a pleasure. I'm glad to see so many people on here. I'm humbled, and I'll see you tomorrow. Thank you for that. And Amir, I'll leave it to you to end the webinar, all the technicalities. Cheers, guys.
Thank you very much, Adrian, once again. Yes, so 2 p.m. Eastern, Howard, that's, I believe, 7 p.m. GMT. So
exactly
you're
the
right
same
there.
time as today.
Exactly the same time as today, same place, same link, and
well, a different link, but at the same, we'll be getting the link from the same page.
Exactly, that's what I meant on Accelerating Profits, the same link for the main page. You will be able to get the new link for the next day. You can check your inboxes. You'll probably get it there as well. But just in case, you can always go to www.acceleratingprofits. You'll have the recording of this webinar there, and you'll have the link for the next one there. And throughout all the 5 days, we'll have it like this. So it'll be the same time and the same place for us every day for the next 5 days.
Right, excellent. Thank you, Amir. Cheers, guys.
Thanks, everybody. Goodbye, and see you tomorrow. Bye-bye.